Joined by Sudhir Singh, CEO at Coforge. The last conversation, Sudhir, we had was, of course, extensively around the Encora acquisition and what you're going to do there. And I just want to, and we'll get to the numbers in just a bit, Sudhir. I think you've told investors that in terms of financing that, you are very close to finalizing that loan, and there is no need for a QIP. Can you just tie that in terms of the financing of the acquisition?
That's absolutely right. When we spoke last, and on the 26th of January, we said that we might consider a QIP for retiring the $500 million debt that's on the company's books. We have been working with a consortium of banks. We have secured a rate of interest which we found extremely attractive. It's somewhere around the mid-single digits, and therefore we will not be doing a QIP and the associated equity dilution. We will be going down the loan route, and we remain committed to what we said earlier. There will be no EPS dilution as a consequence of this loan assumption as well.
Yeah, I mean, equity is more valuable, isn't it? Sudhir. Rate of interest, you said, where are we at on this?
Mid-single digits.
Okay, mid-single digits. Anything else, just to tie in the Encora bit from the last time that we spoke, any movement at all, or all proceeding smoothly?
All proceeding smoothly, all proceeding as per plan.
Okay. Let's get to, so no QIP. That's essentially the first headline that we want to put out. And they're going to do the loan, $550 million, mid-single digit is the rate of interest, but no QIP, no dilution. So these the numbers, as I said, I prefaced before I came to you, are good across the board. They've beaten expectations. On the BFSI side, though, which is a significant portion of your numbers, there is a bit of a degrowth. Could you start there? What happened in the quarter?
Well, this was a seasonally short quarter, as you know, Prashant. We've closed 6 large deals during the quarter as a firm. 2 out of those 6 large deals have come in on the back of from the banking sector itself. And in the investor call that we closed just about 15 minutes back, we've told the investors that next year, given the large deal momentum that we are looking at in Q4 and beyond, we believe that BFS has a very good chance of possibly being the fastest growing vertical for us in FY27. So we feel very good about banking financial services. And quarter 4 onwards, that reversal should be very visible.
And overall, FY27, considering your executable order book over the next 12 months is up 30%, what should we expect in terms of organic growth? And when will the Encora acquisition close? And how much can that contribute in FY27?
Sure. So as you're aware, we don't offer revenue guidance, but in the investor call earlier today, we said that we believe that FY26, and you know that YTD we're growing 32.8% at the end of quarter 3. We believe FY26 has been a very good year, and we believe very strongly that FY27 is likely to be an exceptionally good year. That's how we've characterized the likely growth numbers that we see ahead of us. As far as the second question is concerned, the growth at this point in time is coming from all 3 core verticals. It's also coming, in our case, from the healthcare and the public sector outside India space. With Encora coming in, there are going to be a few additional growth levers. High-tech as a vertical, LATAM as a geo, 11, 10 million plus accounts that gets added. So the intent, as we maintained over the last 1 month, when we did announce the Encora acquisition, is to not look at Encora and Coforge delivering the same level of performance as we have over the last 8.5 years, but to actually bend the growth and the margin numbers upwards from where they are right.
Yes, I remember you called it defining moment, which will accelerate Coforge's growth into a higher orbit. I think those were the words that you had used when you had made that acquisition. Tell us a little bit more about these new verticals, which are also doing very well for you. Healthcare, high-tech, and this time your rest of the world business, which I believe, as you're saying, is the government leg of the business, has done very well for you. So how much can that drive the overall top line in FY27?
Healthcare and high-tech together are already 10.5% of our aggregate revenue. that business has doubled over the last 4 quarters. The exact number, if I remember correctly, is 95% growth across healthcare and high-tech. And this is all pre-Encora. With Encora coming in, we expect the growth to be on steroids going forward. The UK public sector and the Australia public sector again continues to do extremely well for us. In the investor call that we just concluded, we said that outside the 6 large deals in Q3 that we've already announced, there's likely to be a very big contract in the UK public sector in Q4, the quarter that we are currently in, that we expect to sign. So we feel very good about high-tech. We feel very good about healthcare. We feel extremely good about the public sector outside India. And of course, the core verticals, including banking, are firing very, very strongly.
The guidance which you gave, as the last time we spoke, with regards to, just to go back to Encora, about 200 basis point margin expansion, that's very much on track. I mean, that is the aim still, right?
Absolutely, yes, Prashant.
What about margins, Sudhir? Because I remember in one of your analyst calls, you said that FY27 onwards, you'll stop giving a margin guidance. You had guided for 14% by this year and you're on track to achieve it. But thereafter, you may not give a guidance per se, but 14% will be the floor on margins. Can you tell us what the company is likely to do thinking on margins?
We believe FY27 is going to be an improvement on the margin front over FY26. We don't give a revenue guidance. We will not give a revenue guidance in the future. We never used to give a margin guidance. We gave a 1-year margin guidance for FY26 alone. We've said that there will be no margin guidance in FY27, but we have committed to the fact that at a minimum, the margin on the EBIT reported front will be maintained where it is, and it will be our absolute intent to make sure that it doesn't just remain flat. It looks up incrementally and hopefully materially.
Hi, Sudhir. Good morning and good to speak to you after a while. Sabre, that's one of your key clients. Some are doubting that there is financial turbulence out there, which in turn could impact your business. What do you have to say about that?
Sabre was signed about a year back. In the first week of the current month, the leadership, including me of Coforge, had a 3-hour meeting with the CEO, CIO, CAO, the entire leadership of Sabre. The program is going swimmingly well. We are ahead of the delivery milestones that we set for ourselves. We've always told our investors to recognize that Sabre is likely to be only 4 to 5% of our revenue. Please do bake in the fact that this is a firm, Coforge is a firm that's growing almost 33%. So while we continue to partner with Sabre, and that partnership is going well, we remain very cognizant of all risk mitigation measures that need to be taken at our end. They are all in place. Delivery is on track. And we feel very good about where that relationship is and the risk mitigation measures that we have in place.
You know, I asked you this last time as well, so they're going to ask Shweta as well when both of you came on about, because I mean there is, I think the first tranche of shares eligible, I mean, the Advent can sell in, I think by June, right? About 50% of shares. I mean, and Shweta, of course, very clearly said they're in it for the long run and they're not here to sell or anything. No, any conversations around that? Any assurances, etc.? I mean, you'd understand, markets always, of course, have an eye out on that if there's large supply around the corner.
Prashant, we've had no conversation around this, and I suspect Advent is best placed to comment on it. From a regulatory perspective, they are allowed to sell 6 months post-closing, and closing at the current point in time appears to be likely to happen around April of this year. And they've also committed contractually to hold on to the remaining 50% at least till the end of June next year. Those are the data points that we have at this point in time, and I'll defer to Advent to comment on their plans.
Yeah. I mean, the conversation with Shweta at Advent was not very old, and at that point she had said that, see long-term creation, value creation with this investment, and that there are no plans in that sense. So I assume nothing has changed, but just wanted to ask you that. Sudhir, thank you very much for joining us. It's a pleasure having you with us on CNBC-TV18. Thank you for being here.